Good morning, good afternoon, or good evening, and welcome to the slightly delayed, the 15 minutes delayed TGI Friday. Thank God it's Friday, the 30th of August. Bull versus Bear webinar. Steve Miley on the call here. Welcome everyone. Last webinar of the month. Last webinar of August. Left you in Duncan's capable hands yesterday. I'm sure he took care of you. And Duncan will continue to cover some of the webinars. We want to mix it up a little bit, give you a different kind of perspective. So Duncan will continue to maybe do 1-2 webinars a week. I'll be doing 3-4 webinars a week going forward. And just on one other note whilst we're here, a bit of housekeeping. Friday, you should have received an email, or if not, it goes out shortly. I can't remember what time we set it to send, but highlighting the fact that Monday is the Labor Day holiday in the United States. So they are abbreviated trading hours. Markets, I think, open as usual on Sunday. Depending on what market you're trading, there are different closing times. Please be aware of those. A lot of the closing times are around lunchtime, around midday, either side of midday. So please do check though, because I don't want to give any specific details. You're all trading different products. I know a lot of you are trading the ES and NQ, but I don't want to confuse matters. There's a link in the email that was sent out. We will also post in the forums. It will also be posted in Discord, and it will also be posted on the heads up. So you need to check though for the market you're trading when the closes. My strong advice is just don't trade. Don't trade. It's a holiday. If you're in the US, take a holiday. If you're not in the US, take it as a holiday, right? From trading. Markets tend to be less liquid on the holiday sessions, meaning they can be more gappy. They can be more prone to jumps, and the lack of liquidity can cause very short-term intraday increased volatility. So the markets might gap through stops, and you might get bad fields and all that kind of stuff. So particularly if you're in the live environment, so be careful of that, all of you. I would suggest don't trade. Is my strong suggestion. So let's get back to the program though, what we've had and what we've got coming up. We'll start off with the calendar in here. So yesterday, I'm sure Duncan covered some of this, but yesterday we had German CPI data. You can see in here it's in red. That's not a negative, that's a positive with CPI because it means it's lower than expected. So yesterday's German data was positive in the falling inflation. Yesterday's main data was the US GDP data. We do get part of the PCE data, but it's not the important part, which we get today. But we got the GDP data better than expected, as you can see in green here from the US. So those two are definitely both positives in here from both sides of the Atlantic, from Germany and from the US, two of the world's largest economies in here, showing both slowing inflation and solid GDP. The GDP number more important than some GDP numbers. Some of the GDP numbers are just like final updates. This was the preliminary. See the little P? It's the preliminary data for Q2, Q on Q data for Q2. So that makes it more significant in here. Because it's a preliminary first look data. Looking into the day, we do have. we've also had further inflation data, French CPI data. You can see as well. Although there are bits in here in green, some of it, the year on year on the year on year data. The CPI data was slightly up, but the GDP data slightly down. So slight negatives in here, very slight negatives. But overall, the market's taking it as a quite positive. The German unemployment data better than expected. So again, a positive coming from there, and the Eurozone as a whole, preliminary CPI data coming in bang in line with expectations. So again, that will be seen as a positive, and the unemployment rate is the Eurozone better than expected. So all of this data kind of pointing to both sides of the Atlantic, French, Eurozone as a whole, German data, and the US, all pointing to inflation continuing to pretty much come down, and for the economy, the GDP, the growth data to stay relatively firm. And that's what we want, right? We want slow retreat in inflation, and then the economy to stay relatively solid. And that's kind of a Goldilocks scenario for the growth and therefore for stock indices. Looking into the day, the critical focus is all going to be on the core PCE data in here. We get that in 41 minutes time, just 41 minutes time. So keeping an eye on that is going to be, I think, particularly important for the bond markets and then in turn for the equity markets. So we'll come to that shortly. We'll look at the bond markets. But the inflation data, and the markets are less focusing on inflation data. Inflation's continuing to move the right way, i.e. down. It's under control. We have inflation measures around the world now in the major economies between 2 and 3%. Now, 2% is target, and we're obviously moving from, in some places, double-digit inflation. We got, in the US up into high, just below 10%. In the UK, for example, we're through 10%. So we're moving down towards the target levels, 2%. And moving there gradually whilst the economies are staying in good standing. So PCE data was far more important. I say it's becoming slightly less. All the inflation data, unless we see a big blip back up on inflation data, it's becoming kind of slightly less important. We want to see it continue to come down towards 2%, but it's slightly less important than it previously was. Eyes really on growth and unemployment data now to make sure the economies are holding in now, because obviously we've had the brake put on it for inflation, we've had higher interest rates, and now we want to make sure that is not impacting into the growth and the unemployment situations around the major global economies. But nevertheless, PCE data is important. It's the Fed's preferred measure of inflation, so we'll be keeping an eye on it. Don't forget, a little later, 10 o'clock Eastern time, we also get the Michigan consumer expectations and sentiment numbers. They can have a little impact to always come out on a Friday towards the end of the week, so do keep an eye on those as well. We're not going to focus on the earnings calendar anymore. We obviously had Nvidia a couple of days ago. Nvidia took a hit, but was only down 6% with forecasts of it being down as much as 11%. It did rebound after the open, but then sold off and closed on the lows, down 6%, ended up 6% down on the day, but not as bad as that 11% swing that the option markets were pricing in. So that's a positive. And then also we've had a slight rebound already on the overnight, on the pre-market activity for Nvidia in here, the market rebounding as well. So that's a positive. For me, if I'm long-term long on Nvidia. I'm adding to positions. I think it's a great opportunity on this, another dip in here. So continue to be a buy on dips for me in here. All the outlook for me looks fairly firm. Just a reminder as well, we've finished another week. And if we go look at the Fed Watch, the Fed calendar in here, their blackout period calendar. Remember, the Fed meeting is on the Tuesday the 17th and Wednesday the 18th of September, and we get the decision on the 18th. The Fed go into their blackout period a week and a half before then, so it'll be next Saturday. Okay, so we only have next week in here. So we only have Monday through. Well, it's actually not Monday because I'm assuming no Fed speakers on Monday due to the Labor Day holiday. So we only have Tuesday through Friday of Fed speakers in here. Of note as well, I didn't mention it just now when I was talking about the Labor Day holiday. There will be no webinar. So you guys who are regularly on the webinar, or anyone watching on the recording, no webinar on Monday due to the US Labor Day holiday. And as I said before, watch out. I wouldn't be trading markets if I was you. I would stay to the sidelines, enjoy the holiday. So next week we only get now Tuesday through Friday before the Fed enters its blackout period. Let's just run through the overnights in here, and nothing really on the fundamentals, nothing really of note. We're leading with from 5 things to start your day on Bloomberg in here, leading with the PCE in focus, so the Fed's preferred inflation measure. Treasuries continue to go well. US government bonds returned 1.5% in August alone. That's the rally in bonds, the price being higher, that's yields being lower. So a big significant push to lower yields throughout August, set for a 4th month of gains in here. So 4 months of positive gains, longest positive run since July 2021. So positive for bonds in price equals lower yields, positive for stocks as well. August might have begun with an eye-watering sell-off in stocks. It certainly did, but a solid recovery means that global equities are also closing on a 4th month of gains. So equities, despite the big sell-off, showing gains, going to potentially end up the month with slight gains in here. And the S&P 500 has seen only one negative month since late last year, and 17% gain so far in 2024. European stocks are hitting record highs in here today. The Euro stocks 600, I think it is, has hit a record high today, and getting a boost from that data we just looked at. Another boost for markets came from China. Bloomberg reporting that the nation is considering allowing homeowners to refinance as much as $5.4 trillion of mortgages. So all positives from everywhere. So markets looking up going into today. So here's the one of those articles: Wall Street set for gains as rate cut view mounts. Euro area inflation eases. We covered that. Traders now await US core PCE. Global stocks in fourth month of gains. Europe at record high. So we will scroll down here. Where is it? The Euro 600. Don't know if it's on here. But also Nvidia edging higher in here. And as I say, European stocks, I've got it on one of these articles. The Dow, I know a lot of you guys mostly focusing on the ES and the NQ, the S&P and the NASDAQ, but the Dow closed a record high. And Nvidia, this is old, but Nvidia fell, but now rebounding. And what else do I have for you? Futures are gaining on the overnights ahead of inflation data. Fed September meeting looms. Well, it's not really looming. It's still a week and a half away yet. French inflation retreats to its lowest level in 3 years. Came in, remember, as line with expected. German inflation was also positive. Eurozone inflation and growth numbers in Europe all looking positive. Here it is. European shares hit record high. Real estate stocks surge. The stock 600 up 0.3%. And its highest level since June this year, so getting above the June level in here today, and record highs abound except in usual place in here. So so as we said, Dow Jones in here, not the usual suspects, as we said, not the S&P and the NASDAQ, so all looking relatively positive going into today. World stocks in turbulent month higher as US data inflation moves. So if we look in here, the Hang Seng was up 1.14% on the overnight, 0.74% on the Nikkei. Shifting to Europe, you see European stocks up between 0.2 and 0.4% across the UK FTSE, the German DAX and the French CAC so far this morning. And turning our attention to the US in here, we're up nearly 0.3 on the S&P, and the NASDAQ in here is up nearly 0.5%. Look at the mid cap in here, though, the smaller stocks up nearly 0.8 in here this morning. I'm not going to run through any detail. The Fed Watch tool, I covered that early in the week. It's not really moving about in here. Still pricing in, I think, year end in here is the most, the most surprising, I guess, with the market pricing in now. Only a 30% chance we only get 75 basis points. So a 70% chance we get 100 basis points. Remember, there's only 3 meetings until the end of the year. So the market pricing in pretty much 50, 25, 25 or 250s going into the end of the year of rate cuts. This is a chart I think is going to be quite important going into today. This is the bond yields, okay, on the 10-year bond. I'll also look at the other bond markets in here, the actual futures markets on the 30s, 10s, 5s and 2s in a second. But you can see here we've been coiling. We had that big sell-off in here through the early part of August as there were concerns around the US economy. Big sell-off. It's a big rally in bonds, a move lower in yields. So the bonds rallied higher, yields sold off when we had the concerns about the US economy from that unemployment data at the beginning of August. And then since then we've been in this kind of choppy holding, a flag pattern really. So the flag, obviously with the flagpole here, would be pointing to lower yields. And similarly, if we go and take a look at the US in here on the markets, even though we've got the longer end as bullish in here on the daily, and then we've got the 5s and 2s in here as more negative. The breakout levels are kind of quite close. So I think there is real risk that we break to the upside on these today. It will depend on the US PCE, which we got in just 30 minutes now. So 31 minutes we have the US PCE data. That could see, obviously, Nvidia's not really impacting onto bond markets. The PCE data will should impact onto bond markets. And if we get a breakout from these coiling ranges that we've been in, you can see this line here, we're kind of pushing to the downside on the 10-year. But if we break above the recent peaks, and we'll come and take a look at it on the charts shortly, but I will refer to this. If we break up above any of these first resistance points in here, I think it could see stocks really rally quite solidly in here as we get a move to higher prices, lower yields. Stocks remain positive anyway after the strong rebounds that we've seen in here, or decent rebounds, albeit choppy, over the past 24 hours after that Nvidia sell-off. So there's the 10-year note in here. You can see it's in this kind of coiling flag type pattern in here, maybe pushing on the downside slightly. But if we clear these peaks up here, any of these little resistance lines on the 10-year, and you can go do the same, go and look at the 30-year, 5-year, 2-year, I think we start to break through resistance points. Now, obviously, if we break down through supports, then it's going to be lower prices, higher yields, and that'll be negative for stocks. But if you're looking at this, for me, the risk is we break to the upside. We continue this kind of flag pole here. This is a flag, and then breaking to the upside, I think, is the risk going forward, going into today. So watching out for that. I think the bond markets could trigger, particularly if we get the break to the upside, the bond markets could trigger a relief rally in stock indices. We could see back towards the all-time highs, and then and see maybe the watching for what Nvidia does. See if Nvidia can get a rebound going. A long way off in the Nasdaq from the all-time highs, but the S&P in here could easily be back at the recent highs. Maybe not back to the all-time high over here from July in here, but potentially up towards that today. I think we're pushing back, and again, you've kind of got this little flag pattern, right? The market is looking now for leadership from the bond market. So watching out for those bonds, I think they could trigger the next move in the equity markets, and potentially after the PCE data today. Don't forget, we also get the consumer confidence numbers in here at 10 o'clock Eastern. Don't forget, the market is partially closed. It's going to close early on Labor Day. So don't get caught. Don't fail your evaluation. Don't lose your funded SIM or funded live account because you are in a position during the early close. Okay, my strong advice, I will repeat again, is don't trade on Monday. Yeah, take a day off, take a rest, do some research. If you're that into your trading, you want to just do some research, do some back testing. I wouldn't trade personally, but I know some of you are going to go ahead and do it anyway. Just be careful for pockets of illiquidity, which can lead to increased very short-term intraday volatility. All right, on that note, I'm going to wish you all a great trading day. I'm going to wish you all a great weekend. I'm going to wish you all a great long weekend if you're in the US, and enjoy the Labor Day holiday. We'll be back with you not on Monday, on Tuesday, for the next Bull versus Bear webinar. Take care. Bye.